2017-16 was a near identical setup. That is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes.
Today, as we step into a world of financial intrigue and dynamic market forces, we'll hear the latest predictions from Real Vision CEO Raoul on Bitcoin, crypto, and where the market is headed in the coming weeks. With the keen eye of a seasoned investor, Pal casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing its significance against a backdrop of economic uncertainty. Bitcoin is sitting just above 94,100, up over 120% year to date. Amid this fiscal tightrope walk, Pal discusses not only the economic indicators, but the absolutely parabolic surge in crypto prices we're about to see. Raoul says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. This isn't just speculation, it's a pattern Pal has seen before. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. With major pension funds and institutional investors on board for the coming cycle, Raoul predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before.
Look, overall, the trends are all right. And we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for. And everyone's at kind of a max fear right now. It's crazy.
What is the banana singularity and why are we all saved?
Okay, so that is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes. So everybody's asking about, I put a big thread about it yesterday. Has the market topped? What's going on? Is that M2 chart going to play out? Are we all, does it go down to 75,000? Yada, 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 yada. I mean, it's all day. And then it's like the Fed aren't going to cut rates. That's the end of the market. They can't, just so much noise. What I urge people, I wrote it, I think, in response to you, Ovi, is 2017-16 was a near identical setup. So the market has been following the pattern. But outside of that, Trump got elected. Everyone went, oh, tariffs, they're inflationary. The dollar screamed higher, rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and will then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar. The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system. And I think that's sort of somewhat purposeful overall. But if we go back to 2017 and we had that setup of the dollar turning over and then rates actually came down for the rest of the year. The other thing, the Fed were raising rates all of 2017 and crypto went up.
Yeah.
US M2 went down. So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE and the UK did some QE. We got a near identical setup. The market is over extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does. Not global money supply, global liquidity does going forwards. We know back in 2017, the Treasury drained the TGA for the same reason. I mean, it's like literally everything is an exact rerun of what happened. So look, I don't expect an exact rerun this time, but probabilistically speaking, there's nothing to be concerned over. Now, when we looked at that big M2 drop last time around, and this time around, it leads by about 12 weeks. So last time around, we had an identical M2 drop. You can see it. I don't know if you can share that chart you're looking at now after that one. So this one shows the near identical pattern in M2 back then versus now. What happened was the dollar weakened, global M2 went up. What also happened is the NASDAQ had a similar correction, crypto very similar. And what crypto did was didn't follow M2 going forwards because it starts to decouple as the bull market takes place. And what happened was it did an 8-day correction and did negative 35%. This time it feels like it's slightly more sideways. Whether it goes a bit lower or not doesn't really matter. But the point being, you're looking for the bottom as opposed to a sharp acceleration from here. But either way, it's over pretty quickly. And then what happened last time around is the moment Bitcoin hit a low, alts took off. And so that's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like, it's all fine. Financial conditions drive liquidity. And so crypto's been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And over time, I think, yes, we get product market fit. I don't think AI is the product market fit currently. I think that's all narrative based versus the reality of where it is. But we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. You know, people forget that. Like, the institutions here, it's amazing. Well, it has to be if you want 100% rise. You need larger pools of capital now because it's a much bigger market. But that's a good setup, right? It's just a good setup for the year.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices.
So what have we got here? We've got us over extrapolating on the future of AI. The reality, because I spend a lot of time in AI world, is the reality is agents don't exist in AI yet, right? So we don't have agents. What we have is a bunch of macros and plus AI search and a chatbot, right? This is not agents. And to watch ThreadGuy and all these guys, this is the future of the world. They are so far behind where AI really is. The technology we're seeing in this token side is 2-year-old technology. So we are not anywhere close to what is about to happen in AI world in 2025, which is full autonomous agents. It'll blow everybody's minds. And it will not come to crypto first because Again, people are like, oh, there's so much money in crypto, 16 billion, that's a funding round for OpenAI.
Yeah.
They have so much density of talent between Anthropic, OpenAI, Google, and Meta that it is laughable to compare us to that. So I think that the risk is here that we've hit peak attention because everyone was bored over December, and we've forced a narrative. The narrative over time will be like the metaverse, spot on. Like DeFi was, spot on, right? These narratives are right, but we're over extrapolating, which is why I think it's a mid curve. We're over extrapolating, kind of claiming that we've reached the holy grail within a bunch of degens. And I think Ovi's point, it's the same people. It's exactly the same people who were pushing WIF 6 months ago. And so we're not doing anything different. I spent a lot of time with people like Andy Ellie and stuff like that, finding out really what's going on. What was interesting from him was getting a mimetic to leap from his model to the human conscious and become viral. Okay, that was very interesting. And so, you guys using an AI for Rec Guy may be nothing to do with, is it this some sort of agent that people can use? And more is, can it implant virality of mimetics? That's very powerful. That is a proven thing. And it ended up raising capital in this random thing.
Bank of America just confirmed their position of no more rate cuts. Given what you're saying about Trump coming in, rates having to go lower with a lower US dollar, is Bank of America just flat out wrong?
I think rates do come a bit lower still. But as I've said, it's not about the US. Rates went up all the way through 2017. It's not about US rates. It's about global liquidity. That's the single most important thing for people to understand.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below.